Hello, everyone. Today is Friday, March 5th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If you're new to these videos, welcome. It's good to have you here. We break them up into two parts. In part one, we look at everything that went on this week in markets. So everything on the left-hand side of the column here, correlations, performance, volatility, credit markets, market internals. And we look through all that data and sort of just pick apart everything that stands out and looks unusual or interesting. And then in part two, we jump into the charts. We look at those longer term trends, make some sense of what's going on from part one into part two, and try and just best position ourselves and think about where markets are moving in the coming weeks ahead. Hopefully that sounds good to you. Hopefully you're in the right place. Let's kick it off with some of the top happenings from this week. Highest volume across many metrics this week. That's an important thing to note. Volume usually comes in, at key turning points or at very emotional sort of points of interest. And so between the action we saw this week, which was pretty volatile, we managed to put in some of the highest volume weekly bars since the pandemic started back about a year ago, almost exactly a year ago. Rates in the US dollar, they continue to rise. Now, most of the rates, yields, that is, did not really take out last week's highs, and that's a good thing, but they still managed to kind of fall back or rally back to those levels. So that's concern. The US dollar putting in a strong follow through week. So we're seeing a lot of dollar strength out of there, putting pressure on commodities and the like. And tech continues to underperform. It certainly staged a big comeback late on basically the second half of the session on Friday. We're going to talk about whether or not that's the bottom and if that's in and it's tradable. So we're going to discuss that more in part two. Now, if we look at some of the performance, you can see things were mixed, and this really doesn't tell the whole story. It looks like a kind of normal week, but it was pretty volatile out there, and especially in some individual names. So again, we'll look at that a little bit later, but we saw the Dow Jones really standing apart this week, up almost 2%, S&P 500 up almost 1%, Nasdaq was down almost 2%, so look at the spread there between the Dow and the Nasdaq. Russell 2000 was also down, and international stocks held up pretty well, which is pretty interesting to see, especially how strong the US dollar was. If we take a look at market internals, this continues to be the bright spot. We've talked about this. We haven't swayed in this analysis, and there's nothing to sway because we're simply looking at the data and the numbers have continued to show us that market internals have been still supporting this market. So if we look particularly at that first row, the number of stocks hitting 52-week highs minus the number of stocks hitting 52-week lows, that continues to be a fairly strong triple-digit number there. So 611 on the week. Obviously, into the thousands is best and ideal and very strong for markets, but over a 5-day horizon here to still see in aggregate 600 stocks hitting 52-week highs, that is constructive underneath the hood. Again, kind of the same thing we said last time as well. It's going to depend on the sector, right? It might not be the sector that you want to see, but it still bodes well for just the underlying strength. So it might not be mega cap tech that is influencing these numbers. It might be energy. So it's your job as a trader, our job as someone doing market analysis here on a routine basis to kind of uncover those pockets of where that strength actually exists. So that's strong to see. Cumulative AD line positive here, 1300. Again, lots of turbulence this week between Thursday, Wednesday, and Tuesday, but ultimately the strong rebound on Friday put us back up there. And again, strong rebound on Friday put us back to 60% of stocks in the S&P 500 are above the 20-period simple moving average. So if we look at the cumulative NYSE 52-week highs minus lows, so we basically just take everything in aggregate, sum up all of the prior days over the past 30 days, and you still have this nice uptrend in place. This helps visualize just the longer term trend here, and this is still the current. Notice how different this chart looks. If the real slide that would be pretty impressive to see would basically be this side by side the Nasdaq 100, or this side by side the S&P 500. Because if you were to have that overlay right now, you would have basically seen the S&P 500, selling off this week and just, cratering down. And cratering is a strong word because it was, 8% pullback or whatever it came to be. But, pulling back while this continues to show the underlying strength. So that's a good picture here. This is one of the key points on why I still remain constructive on this market. Now, if we look at sector performance, this also tells the story. Everything here kind of fits and tells a piece of the narrative. So you may ask yourself, okay, well, lots of underlying stocks hitting 52-week highs. Where's that coming from? And then we look at the sector performance here, and you see that very clearly coming from energy and second place financials. Energy was up 10% this week. That's a huge outperformance and a huge spread versus the rest of the market. So that was impressive to see. Financials equally as impressive. Industrials in the third spot, speaks to the Dow Jones being one of the best performers on the index side. On the downside, it was consumer discretionary. So consumer discretionary was down 2.66%. We also had real estate and technology rounding out the bottom three, and only three that stayed in the negative. If we look at correlations, so correlations here were telling us the pretty clear story. Last week, we spent some time looking at 10-year yields, which is this column right here. So this little percent TNX, that's the 10-year yield. And we really kind of noted the negative 0.85 correlation here to the Nasdaq 100. And this was really showing us just the data confirming the narrative here that as rates continue to skyrocket, it is almost directly one-for-one inversely correlated to the performance of the Nasdaq. So if yields continue to go up, the Nasdaq's going to continue to go down. That was basically our takeaway from last week. We needed to see yields stabilize if you wanted to see the Nasdaq stabilize. And we continued to see yields basically rise this week. We didn't quite take out last week's highs, but we still saw them rise on the week. And we saw, again, continued pressure on the Nasdaq. So we're going to talk more about the trends and kind of turning points and the actions from this week. But that relationship is still very, very strong. So keep an eye on the yields heading into next week. If you see them skyrocketing, if futures open up and you're seeing, rates continue to rise, you should expect, or the default expectation at this point is that stocks are going to be lower on that, particularly Nasdaq stocks. If we look at this other strong relationship here on the dollar, look at this negative 0.97. That's basically as perfect as you're going to get on an inverse correlation to silver, and 0.926 to gold. What that's basically saying is, we saw gold and silver get hammered this week. Gold continued to get hammered. The dollar has been ripping, and the dollar continued to rip higher this week. That is putting a direct pressure on metals, and you're seeing that right in here. These are 10-day correlations, so you're basically seeing if the dollar's going to continue up, you should expect right now silver to be hurting. Same thing with gold. That's what's putting the pressure on both of those. Those are a couple of the takeaway correlations. Obviously, there's more you could kind of comb through here, but hopefully that's helpful. If we look at volatility, not a whole lot changed here in terms of VIX this week. I mean, I guess the most impressive thing is that the VIX actually came down this week after everything was said and done. So it was a very volatile week, but by the end of it, it was trading around 25. I think it was interesting. I mean, I think volatility is actually interesting right now, especially with some of the sell-off we saw this week. We didn't really see anything explode through 30 or start getting back north of any of those old prior levels. So volatility has been relatively contained. I think that's kind of net a good thing. I think it kind of shows that maybe we're finally starting, maybe we're going to be shifting down, and maybe we'll start seeing some teens soon enough if this market can continue to stabilize. Right now, that's very early to say. But, that's kind of what I'm getting out of this. Not too much else new to add on this particular data set. Interest rates. So again, you can see interest rates were up across the board. We saw investment grade bonds. We saw high yield bonds actually was up, and LQD was down. Really no big takeaways from this here. It's kind of what we just talked about, though, with yields going up. And we're seeing that. In terms of dollar and commodities, so the dollar index up 1.06%. That's a big move for the dollar. That's a follow-through move for the dollar. We saw gold down 1.66%. We saw silver down 5%. Bitcoin recovered this week, so up 9%. Remember, we saw last week it was down off 13, 14%, something around that ballpark. Recovering this week. And crude oil up 7%. Huge move for crude. Continues to rocket ship higher, continues to help fuel those energy stocks. And those are some of the splits we saw across the board. So if we look at the report card this week, ultimately there wasn't a whole lot to really like from, just a holistic view. The market breadth continues to be the bright spot here. It's the only thing earning a check mark right now. And I really do like that check mark. I put a lot of credit on market breadth. So that was good to see, but still a fairly discouraging week when we kind of look at everything outright. Get a D for report card for market performance this week. Now, in terms of our trading systems, we've got two that we're trading here, Merlin and Lamerick. There's a lot of information on our website about both of these trading systems. We got one that's basically, call it all in, almost 100% invested here. That's Merlin. It got stopped out plenty this week, so it basically rode through the storm. And that's what I would expect. That's what this system is basically designed to do. It's certainly going to step aside when it thinks the market's really ready to roll over and see some type of bigger pullback. Right now, it's not forecasting that. It does not see big, meaningful structural shift lower in the market. That could change next week, but for now, that's not what it's seeing. So it's been basically, continuing to step in here, hold exposure, and want to participate in this market. This second system here, Lamerick, this was like 100% invested, close to 100% invested last week. It used, so if you recall, I think it was Monday or Tuesday is when we saw the big rally last week in the market. It was Monday. And Monday is where this basically started offloading all of that exposure and, has been pretty tactical since. So there's lots of cash here for this trading system. That's the kind of, basically the mold for how we're actually invested. That's where the dollars meet the actual road and kind of what we're doing with some of the accounts that we're trading. So hopefully that's helpful. A lot more information, free trials at the link appearing in the top right hand of the screen. And we'll be back in just a moment here with some charts. All right, we're back. We've got TC2000 open. We're looking at our equity market grid. So we have price itself is the white dashed lines you see on all of these charts. The multicolored dots, green, yellow, red, are a custom smart trend filter of ours. It measures price and volume and helps us determine trend and trend strength. And we're looking at a weekly time frame. So when we look across the board here on the weekly chart, despite all the turbulence, we didn't really get a whole lot of change except for the Nasdaq in the top right hand of our screen. It was down 1.87% on the week. And notice for the first time since, November of 2020, we have transitioned down here into the yellow signal, the yellow trend signal. And this is sort of why the indicator is developed. It's not meant to go from, just buy 100% long and then sell 100% short just because the line here has touched this trend filter. The yellow sort of just gives you an added layer, helps smooth out the noise. It helps you basically see when the trend is currently under jeopardy basically, or is being pressured, and it basically tells you to look at some lower time frames. It tells you to perhaps brace for some uncertainty. Maybe it's lightening up, maybe it's looking at things closer. Again, I don't want to get so much into strategy, but it's designed to, again, give you kind of that heads up and trying to smooth out the noise and not create a ton of whipsaw, which is sort of the downside of trend following systems. So right now, the Nasdaq, for the first time in many months, and it is the only of the major indices we're looking at here that has a yellow warning sign printing here on the weekly time frame. Now, if we go down to a daily chart, This is where things are a little different because we do have sell signals in every single market on the daily chart right now. So again, markets are fractal. You have to pick your time frame and understand how you want to analyze kind of the whole picture, because we have basically a conflict here where we have green bullish outlooks on the weekly time frame, but if we go to the short-term daily chart, we're seeing some sell signals and some volatility stack up. So that's the way we like to look at it. It's, breaking it down into those discrete time frames and knowing what's going down in each time frame. The S&P 500 was basically in the yellow for all of last week, and it turned into a sell signal on Thursday, and it continues to be on a sell signal even despite Friday's rally. Same thing for the Nasdaq, only the sell signal started much earlier on the Nasdaq. So back on Tuesday the 23rd is when you get your sell signal, and then we've continued to see that more weakness develop here in the NDX. Russell 2000 didn't get a sell signal until Friday, and then ACWX basically in the middle here on Wednesday is when it triggered on that sell. So that's the outlook here. If we're looking objectively at price and volume based on these two different time frames, let's kick it over to the candlestick charts. Let's see if we can get a little bit of a more refined view. This is what helps us just take a look at supply and demand a little bit tighter. So here is the S&P 500 chart. It's becoming a little bit more of a messy chart. We've had, prior to this week, so if I clean it up here, we've had, kind of a, generally speaking, a uptrend that has been in place here since, since basically November. We had all this volatility in the fourth quarter of 2020. We broke out in kind of November holiday time, and we've been in this sort of a grind higher here. And recently, over the past few weeks, you can see volatility, the ranges have gotten wider, and we've started to sort of sell off here and, retest some of these old pivot levels. So if we, so that was, I guess, the old channel we were looking at here. And let's see if I can get back to this view here. This is the 3870, 3888 level. This is what we were talking about multiple weeks ago, saying that we wanted to see the S&P 500 hold over this zone to stay as healthy and as bullish and as constructive as possible. Clearly, that did not happen. We saw a lot of volatility around this level. But, come Wednesday, Thursday, and Friday, we are now convincingly below it. And we're kind of sandwiched in this range now between 3,700 to, call it 3,870, 3,900. And so when we look here at the S&P 500, it's actually interesting because if you were to, even, going all the way back to, let's see if I clear up this board entirely. But basically, back in September, August of 2020, we got as high as right in here, which was what? 3426 is as high as we got. This was back in September. And, towards the lows of Friday's session here, we got down to around 3723. So basically in 6 months' time, the S&P 500 had only rallied about 3% from Friday's lows. Now, obviously, I'm cherry picking those 2 points, but it goes to show that the S&P 500, really hasn't, over the past 6 months, we haven't seen a tremendous amount of growth. We haven't been super parabolic in the S&P 500, probably, which maybe is surprising to some people, because I think, we've thought of this market as just being on a total tear to the upside, and it has been rotational and it has been sector dependent. But if we look at the S&P 500, it's been more gradual here over the past few months. So that, I think, is at least interesting to point out. If we look, though, at the closer action, this 3,700 level, which is where we have multiple levels drawn in here, is really where you want to see this S&P 500 hold now. It did hold it on its first test, so it basically got down there on Thursday, didn't really get any further below on Friday, and it did reverse very sharply and close near its highs. And notice the volume that's coming in here. I think even if you go to like the SPY chart, which is easier to track volume and we look at these weekly levels, you can see a lot of volume traded this week. So the market, since heaviest volume since early 2020, that's what we're going with here. That's what we're seeing this week. So we know that it's a more emotional time. There's lots of shares changing hands, and basically, we're seeing the vote of the market at these very significant levels, which do often come at turning points. So when I look here at the S&P 500, back to this chart, 37 and change here, this is where I'd really want to see this hold. If we start rolling over, if we start cutting through 3,700, things just get a lot more dicey a lot quicker. We start losing a lot of this supply that we've been, again, grinding higher in. We start coming back to some older levels in here and some older ranges. So this is, would not be a good scene to see the S&P 500 starting to lose, 37, 3,600. Again, it is arguably still due for some type of more meaningful correction. Maybe a move down to 3,500 would be pretty healthy for this market. Retest the old fourth quarter range breakout. That would be about a 11% move from its all-time highs, which quite frankly, again, would not be the end of the world and kind of fits with what markets do on a general year-to-year basis. So let's keep that, scenario open. It's possible, but one step at a time. 3,700 so far appears to be holding. If it continues to hold 3,700, then, maybe we see some volatility around here and bulls can eventually stabilize this market. If we start losing the 3,700, I would look pretty quickly down to, the 36, the 3,500 levels. I don't see a whole lot more in between here. I think we could cut through pretty quickly if we start seeing that more volatility and more pressure. So that's sort of the outlook there for the S&P 500. In terms of what gets me bullish again, stabilization over 3,700, so time helps. Also a move over, 3,900, getting back over some of this prior levels that we were paying attention to also would help in terms of a breakout to the upside. Now, if we go to the Russell 2000, this is definitely the index right now, the US index that is holding up best in class. So 216, this was the level. This was basically, again, the equivalent Nasdaq level of about 3870 to this 3890 area. The Russell 2000 ended up holding it by weekend. It did not, of course, hold it throughout the week. Thursday we were below it, and Friday we traded mostly below it. But based on how we closed on Friday, we managed to stick our head back over 217, which was over this January breakout level and over this low here from the 23rd and this low here from the 26th. So the fact that the Russell could manage to claw this back, and the fact that the Russell is only, 3%? Oh, I guess that's still 5% from all-time highs. Still makes it the most constructive and bullish of the U.S. averages here. If this low can hold, I think we're in good shape. Again, 205 is the next area of support I'd be paying attention to in the Russell 2000 if we can't find follow-through next week. But so far, so good, and that was a good close here for the Russell. The Nasdaq 100. So the Nasdaq is, certainly in the penalty box. This has been the weakest. We were looking at, I believe it was this chart here that we spoke of. Let's see, Qs. I got too many boards here. This is the one. So I think in the last week's video, we projected this measured move here, or maybe this was in Tuesday's trade ideas video, or Wednesday's trade ideas video where we did this analysis. But we basically talked about the Qs, and when we did Wednesday's video, we were trading right in here, and we were talking about the momentum kind of short setup here for active traders, and we projected out this measured move of where the market could go, and surely, it got right to it, extended a little bit, and then saw that nice reversal. Now, I don't know if this is it. I don't know if we're done selling off right now, but one of the things I do, sort of want to spend some time on is just trying to help figure out if it is and where that evidence stacks up. So I do like the fact that heavy volume has been coming in here. So that's a constructive thing. We don't often, I don't pull them up too much in the videos. I do look at Bollinger Bands a lot. You can see we were quite extended underneath the 2 and 20 Bollinger Band over these past couple of sessions. And these have been good buying opportunities in the recent past in this uptrend. Buying these lower stretches and undercuts of the lower Bollinger Band has been a nice trade. Obviously, if you did that back on the coronavirus side of things, when the big pullback really stepped in, then you would have been in a very, very difficult spot. So this is not something that always works. But again, while markets are contained and healthy, again, if we are going to stay healthy and not totally roll over here, this is usually the spot where you get these nice bounces that can occur. So the Nasdaq here with the heavy volume, the kind of double projected measured move, and the fact that we finally got a nice little 3-week sell-off here, which ended up being about 12% from highs, might be enough to find buyers stepping in. We effectively also retested. See if I can clear off some of these boards here. I know I'm moving all over the place, but we effectively retested, kind of like we talked about in the S&P 500, this fourth quarter range. So, this one started a little earlier from September to December. The Qs were finding resistance around 297. We'll take a look at where we tested on the lows of today's week. We essentially tested this breakout level, and so far we've gotten a nice bounce. Buyers stepped back in, and we have, again, early works, quote unquote, tested and so far held this prior breakout. So those are the very constructive developments that have gone on here. And again, you can see just the weekly volume, back-to-back weekly volume. Look how heavy that has been. Goes all the way back and rivals, some of the weeks here from the early pandemic. So I like the fact that we had 3 weeks down in the Nasdaq 100. I like that we were below the Bollinger Band. Lots of names were oversold in this index. It seems to me like we have a tradable short-term bottom. Now, it'll be interesting to see if it, how long it lasts, because, a couple of scenarios. Obviously, one is we just go off to the races here and it's a total V shape and we're back in new highs by April. Or we could just develop a trading range here for some time. So we could go sideways. Maybe we rally up into the 320s and we essentially carve out a wider trading range for the next couple of weeks. That can happen as well between, 300 to 325 or something like that, as the market kind of chugs sideways and sees some volatility as the whole rate scene gets under wraps or basically just kept in place. And those are kind of the scenarios I think we could see here. I like the action. I like the strong reversal. I like the heavy volume. It seems like in a good scenario here, we'll find follow through Monday, and we'll see how this bounce can take us. So that's it. That's kind of the analysis here. I think we've gotten a good shakeout over the past few weeks here. The Nasdaq's been hit the hardest. Again, the Russell 2000, super promising action there, and as to how well it has managed to hold up. The S&P 500 also doing a great job, a little messier, but still the fact that it's holding over 3,700 I think is constructive. We'll see how next week fares. We'll see if we can get some follow through on the upside. Now, one of the other markets I wanted to mention here, and before we wrap up the majors, is VIX. And I do think it's pretty impressive this week that we didn't really spend a whole lot of time over 30. We talked about this in last week's video where kind of when the VIX gets around 30, it tends to be a buy the market, sell volatility type of event. That seemed to prove pretty spot on here. Both of these, 3 days. Obviously, it's easier said and done in post hindsight analysis, but we basically have seen the VIX rebound aggressively or fall aggressively after tagging the 30 mark here over the past couple of weeks. I think that's constructive that we didn't just run away to the upside and we're not, going out on the weekend closer to highs or still uncertain. We are really seeming to want to, get back to the lower 20s here in the VIX as quick as possible. And I think that character there is subtle, but still meaningful on how we interpret this price action. So that's it. Bottoms trying to stick all across the board. We'll see if that happens. High volume. And let's just be aware of the potential chop that we could find ourselves in over the next couple of weeks. So, let's get to some other markets now. If we look here at TLT, this is rates, this is bonds. So this is where the epicenter is of what's really putting pressure on technology right now. Let's just move right to it and look at it from a trend perspective. We already know that TLT is in a bearish trend. It's been in a bearish trend. There's nothing new there to say. But when we look here at the chart, as we sort of highlighted last week, we talked about just how significant and heavy this volume was back here on Thursday. And notice we did basically bleed lower this week, but we didn't take out Thursday's lows. I still am constructive here that this could be the bottom for TLT. Again, I'm very willing to be wrong. I'm not tightly held to this opinion. So I'm not, again, don't need to rub it in my face if this is wrong. It's just my intuition here is that TLT is going to stick and that this is more or less the bottom. Maybe there's one slight undercut down here, but it feels like it could be the spot at which we finally start to see at least a little reprieve. And maybe that trade again only gets us back up into the 140s or 150 before rolling over again. But it feels like at least market wants to try and keep it together here. And again, I think that is a direct and bullish development for stocks, because as we talked about, as we saw those correlations, if TLT can hold in, then NDX is more likely to hold in. We'll see how this acts next week, but that's kind of what I'm looking at. IEF, you can see this one was a little tougher this week. This is the 7 to 10, so the mid end of the curve, but this is the bond market here again. Significant volume traded on Thursday. We did undercut it, or at least retest it on Friday, but we tried to hang in here. So this one, again, just is a little more dicey, and maybe I'm wrong. Maybe we have another leg down, and that could get, that could get us the 10%, 15% correction in the S&P 500 if this continues to just roll right over. So keep an eye on that. I like the volume. I like the setup for a potential bottom, but we don't have any confirmation yet. It's really early, so be careful if you're playing in that space. In terms of some other markets, oil just continues to run to the upside here, getting very extended to the upside. If we look at gold and silver up here, both, gold has been in a sell signal. Silver, even despite 5% down, is still trying to hold on here on the weekly chart. So still trying to hang in there. We'll see what next week brings. But oil, commodities here, DBC, really getting a lot of the benefit this week and just surging to the upside, extending to the upside. So that's where you see a lot of strength. While stocks are getting hit, we see energy and some of these commodity plays just really continuing to work. So let's get into some sectors now. A couple of the sectors I wanted to highlight here was XBI was one of them. Take a look at this action here. So this is the Biotech ETF, and we were really, kind of bullish on Biotech for lots of, kind of the fourth quarter, as lots of the market was seeing more turbulence. You could see the biotech stocks were really leading towards the end of 2020. They continued their run at the beginning of this year, but now we certainly got that big pullback, and the XBI traded off 26% from its all-time high. So this was a very, very fast correction here of 26%. And then just take a look at the volume, take a look at the hammer that got printed today. This here, again, looks encouraging. I don't know if it's the exact bottom, but it certainly is where buyers are showing up, and we're seeing a change of character here. So pay attention to XBI. Could be a good tradable short-term trade to intermediate-term trade. IBB is basically the same thing, just a little bit less juice. It traded down 18% from its all-time high, kind of came back and retested this breakout zone from January in the 140s. So again, some very good kind of reversal action going on there. And if we go to tech specifically, again, we want to talk about retesting significant zones. You can see here again the September highs for XLK, the chop in early January. We briefly undercut it. We hammered above it on heavy volume here, and this would be again a good spot to see technology stick and hold and get some follow through. Now, in terms of industries, I wanted to just take a quick tour. I know we always get a lot of comments and write-in emails to just talk more on the specific industries. And if we look at just the best performing industries here, actually, let me sync this up. Bear with me. So if we look at the top performing industries, by no surprise, oil and gas drilling, oil and gas E&P, basic materials, so steel, oil and gas midstream, oil and gas equipment and services, oil and gas integrated. So these are all the industries which are all just in the energy space. And then you got some specialty finance in here. So that's what was working this week. That's where the strength was. That shouldn't be any surprise because that fits certainly the sector that was basically blowing away everything else. On the downside, we see solar continue to sell off, which I think is interesting. You know, you could look at the ETF, the TAN solar ETF. This has been a hot trade for the past year, getting a lot of distribution here and just some sell off, 35% off of the highs here. I'd pay attention to solar. I think it's an interesting space. I think you got a correction now. So if you like the space longer term, you're starting to get that opportunity. Silver as well. No surprise, silver, the commodity was down 5%, so a lot of the stocks down. Technology, again, this one in health information services was one of the third worst underperforming sectors this week, down 9% on the week. We had some real estate weakness as well, real estate services. We saw auto and cyclical having some trouble, and then we also saw just a more of the software tech space, semiconductors that were in the underperforming industries. So that's it. That's what I got for this week. Lots to chew on, lots of volatility. Hopefully you manage this week okay. There's lots of opportunity for the prepared, whether you're a longer term trader and investor, scaling into stocks as they hit those 20, 30, 40% corrections off highs in some good names. You had those opportunities this week. In the short term, maybe you were trading that momentum to the downside. Maybe you're trying to catch the rebound now. There's lots going on, and I think that's great for traders basically across all time frames. We'll see if we get that follow through. Looks like we've got some promising short-term reversal action to hang our hats on, and we'll pay attention to those rates heading into next week. So that's my recap and analysis of this week. What's yours? Leave a comment below. I'd love to know what you're looking at. Anything else stand out? Anything else I missed? Any other cool charts that you think are telling the story of what's going on? Leave them below. I'd love to read them. And as always, I thank you so much for tuning in and watching. Every Friday, we do these long form analysis videos. Hopefully they're helpful for you. Subscribe to our YouTube channel or stay up to date with all of what we're publishing on thetraderisk.com. Have a great week, and we'll see you back here next week.